1-800-808-5548. And now, the Real Estate Rat Pack.
Good morning, everybody.
Yes, I've had my coffee.
Yeah, you've had it.
Hi, how's it going? How y'all doing?
We're cutting you off.
We're going to have a fun show lined up today.
That's what they tell me.
What are we talking about?
We're going to talk about what you don't know can hurt you. And we have two seasoned veterans from Prudential Anderson Properties. This is a shameless plug. And this is our shameless plug day, isn't it?
Absolutely.
We're going to talk about us. One of our favorite things to talk about. And in the studio with me is Shannon Reed. Say good morning.
Good morning, everyone.
And Scott Mendell.
Good morning, everybody.
What we're going to talk about is that, oftentimes, that especially in a hot market like this, that people feel like realtors, why do we need realtors? And we're going to kind of talk about some of the things that you can get the information, but you can't get the experience. And that's what seasoned veterans can bring to the table as to what kind of pitfalls to look for and those types of things. So, Shannon, let's start with you. Talk about some of the things that you kind of preempted that probably if you were not in the transaction would not have occurred.
Okay, well, in real estate, there are just tons of areas of surprise. And I think a realtor's job is really to focus on their client and protect them in the best way that they know how, and that's by trying to prevent those pitfalls and those surprises and prepare for them. So I think at the beginning, say you're working with a seller, you really need to discover what their needs are. And when I sit down and I talk with them, I try to find out, on a scale of 1 to 10, what is going to make it a 10 for them in this experience with me. Usually it's timing, pricing, so you really have to understand where they're coming from. And there's just so many times throughout the whole process you're going to have things come up, and it really is that level of experience that realtor has, because you just, there's a lot of savvy buyers and sellers out there, but they may have sold their home 6-7 times throughout their whole lifetime. But then your realtor, they've done it maybe that many times in a month or a year. And so there's just going to be that natural experience that they have to share and to give those background experiences with their clients.
And things and markets change. The way we do business
right.
has changed over the last 6 or 7 years. So, Scott, kind of addressed the same question. When you were working with someone, and I really like what Shannon had said about she's tailoring her service to the client. And a lot of times I know realtors want to tell you, this is what we want to do for you. It's better that the consumer tells us what they want from us. So kind of address it and the things that you see out there.
Well, it absolutely is what they need first. It doesn't always happen that way, unfortunately, but when you're looking at what your client's needs are, sometimes they don't know what they need. And we need to educate them so that they can understand what the best decision possible for them is. And an experienced realtor can keep you from getting in a lot of pitfalls. You look at what the dollar per square foot of houses in a certain neighborhood are. Your clients may not know that. They may be looking just at price of a house, where we know if there's a landfill that's going to be built a block away, or if there's going to be a new sewer treatment plant put in. That's where our experience comes in handy, as we see those things coming down the line.
Let me ask, as a non-realtor, from a consumer's perspective, the internet technology is bringing so much to the consumer now that it's easier, I think, for the perception to be that I got this. Hey, and in Houston, right, all I have to do is go down and buy me a poster board and put for sale on, the sign and put my address, and it's going to sell. So, so address, like from the consumer's perspective, I'm looking at, gosh, there's a lot of sites I can put my house out there. I can do a lot of this myself now. Why do I really need a realtor in this process? How do y'all deal with that, or that mindset, or if you even have to, really?
No, I was just going to say that's a real throwdown question. Thank you for asking that.
Yeah, it comes back to the same thing. It's experience. And right now in Houston, you probably could just stick a sign in your yard and sell it. I mean, we're sneezing and selling houses right now. What you don't get is the experience that we bring, where price per square foot, what do you do when multiple offers hit? How do you handle which offer is the better offer? Because you might get one for $175,000 when you've listed it $170,000, and it may be a great offer, except that its financing is very, very weak, where you've got a cash offer at $170,000 that may be better for you to take versus that $175,000 offer because it'll close quicker.
Now, Scott, are you seeing any issues with appraisals out there? I know we're getting a lot of offers over.
I'll take that as a no. Moving on.
Chris is down there laughing because he gets involved in this process and dealing with appraisers and stuff. But I'm hearing a lot of that. How do you counsel, and Shannon, I want you to address this, how do you counsel somebody to make an offer and then they get angry because you've lost it, but you know darn well it's not going to appraise? I mean, how do you have that conversation with them?
Well, that's I'm trying not to
Not
make
the answer I'm looking for.
Trying not to make every appraiser that's listening out there mad at me. We are having a lot of trouble with appraisers right now. I was sitting in our MLS board meeting 2 weeks ago, I think, and was told that upwards of 40% of houses in some neighborhoods are not appraising right now. And it's very difficult when you've got a very hot market where prices are going up so quickly for the appraisers to keep up with what's going on, because the new system has them coming from as far away as Conroe to appraise houses down in Richmond.
Which is really, their licensing act is very much like ours, is that you are supposed to be competent in the area in which you're working.
Correct.
And it says in Trela, and I'm finding that they're not competent. Shannon, kind of address that same question about appraisals right now.
Well, appraisals are tough, and I guess from a buyer's perspective, they want the house, they get emotionally connected to that house, they want to be there, and you got to definitely look at those last 3 months worth of comps and do the best that you can as far as
And
educating
comp
that
stands
buyer.
for comparables, and that's other properties that have sold within the last 6 months.
Yes. And so getting your buyer to understand how that works, and that is market value. And so you really want to be as close to that as possible. And but there are multiple offers on properties right now, and so you also want to win it. And so there's that whole thing where you...
Well, and as you're mentioning right there, part of using a respected agent or a realtor such as yourselves is that one of the things that we see all the time is that you have multiple offers going on, then a lender gets involved, an appraisal gets ordered, and then the appraisal doesn't meet value. Right? That's one of the most important times to be working with you, because that negotiation process, whether it be meeting somebody halfway, going down a little bit, whatever it might be, is extremely important, because it's not only about educating the buyer as to what's going on, which is your client, but oftentimes it's understanding from the listing side.
Right.
As to what's going on, and the reason why, for example, if it's an FHA loan, that appraisal now will stick with the home for the next 6 months.
Yep.
So you will not be able to just go up and list the home again for a higher price and accept an FHA appraisal on that, or a VA appraisal.
And you're right. It's all about educating. And a lot of times, you're having to educate the other realtor when it comes to that too. And so it's like, you've got 4 sides kind of working together.
Not all realtors are the same.
That's right.
That's why we bring in the pros here.
That is
Nothing
right.
but the best for the Rat Pack.
That is correct. Absolutely.
Scott, I remember you had a while back, you were alluding to an anecdotal thing about thwarting an issue that you had on a transaction. You want to share that with?
Oh, yeah. Last weekend, I deal with a lot of investor clients as well, and purchasing foreclosures can be an art, needless to say. This is kind of where even the most experienced can let you down. We'd bought a house, we'd done all the appraisals, and it was in fairly good shape. We were surprised. Had all of our inspections done, and we get a tenant in inspections and everything, they check water pressure and make sure that all the faucets and toilets are working and everything like that. The very first night the tenant's in, she gets in the bathtub, takes a bath. When she unplugs the bathtub, the water starts pouring out of the ceiling downstairs. And we call the plumbing company. They come out, and when I say pouring out of the ceiling downstairs, it looked like Angel Falls down on the Amazon.
Oh, my.
It literally was a
Wow.
gigantic problem. Apparently her husband had showered right before she got in the bath. When the plumber came out, they looked and snaked the drains and couldn't see anything, and we tried it again, and water poured out of the ceiling again. They finally ran the camera down, and in the standpipe between the first floor and second floor of the main drain, the previous owners had flushed a set of hand towels down the toilets, intentionally trying to stop them up. Well, they made it clear down into the standpipe, and it took 75, 100 gallons to fill the whole pipe. So before we had any kind of clue what was going on, we'd already damaged the property. This was inspected by everybody, and so sometimes what you can't see in the walls can get you.
But you'll probably think about it next time you're selling a foreclosure,
yeah.
won't you?
Yeah, I don't know. If you don't call out a plumber and have the entire sewer system inspected, it could be a
Well,
trick.
what happens out there, and of course we have some foreclosure specialists in our company, is that the people are angry. They're being forced out of their house, so they do whatever they can do damage-wise to make that house unsellable. And that sounds like exactly what has occurred here. So, just be cautious when you're out working with foreclosures and do your due diligence and things like that. So I'm also curious about you're representing a buyer, Shannon, and you're getting into that conversation with them. How do you educate them to, or I guess coach them as to, like, you know what, you may not get this house and things. What's that conversation look like?
Right. I mean, you have to let them know that they've got to be realistic, especially right now in this market. They are competing against other people. And I guess overall, being positive with them, something is going to come up. If this doesn't work for you, we will find you something else. But I think it's easy to get your hopes up when you like something, you want to go after it. But sometimes people will beat you in pricing. It may not be just pricing. I had actually a friend of mine, realtor. The only reason they were competing against, I don't know, there was like 5 offers on this property in Green Trails, which goes very quickly. And the reason that they got this house was actually their offer was a couple $1,000s under, I think, others, is what she kind of found out later. But they wrote this great letter to the sellers about their family and how wonderful they are and how much they want to be in this neighborhood, and on and on. And so that kind of won them the deal. So,
oh, wow. A letter won them over.
Yeah.
Holy cow.
That's very true. I mean, I've heard that is that once they like somebody, they want to do business, even if it's maybe not the best transaction. I have had people do that when we were making low offers. When it was a different market, I would have them say, look, write a letter to the seller, talked about your family. And then reversely, I'd have people who list a house have them write a letter about the house. Like, we raised our family here. My daughter got her engagement party.
Great.
Those personal things really connect with people. And it's just amazing how they can kind of change their mind.
Well, people still do business with people.
That
We're
they
still
like.
a relationship-based society, right? And that's no more true than in real estate, because you have to be doing business with individuals you enjoy doing business with, not only on the realtor standpoint, but the buyers and sellers.
That's right.
Well, in consideration of the topic of the show, this is kind of a neat spin for me, and that I'm hearing here is what you don't know can hurt you. Here's some interesting things. Well, you don't know that maybe writing a letter to the seller can make a difference in closing the deal. You don't know that I put in an offer on the house and I want to buy it. Why can't I buy it? Well, you don't know that there's 5 other offers going, that type of thing. So the market being different is producing a different set of what you don't know can hurt you. So working with a good realtor can let you know that we're competing against 5 offers. Here's where your offer kind of is going to come in. At this price, looking at the comparables, you're probably not going to be competitive in that offer. Those kind of things. So interesting.
Yeah, I think it's very interesting. Next week will be very interesting when all of a sudden all these offers are coming in with letters.
Yeah, right.
We got 10 offers and 8 letters.
That is great. It's like, man, where'd they get this from? The Real Estate Rat Pack Show.
I'm starting to hear that music. I think we're running up against a break here.
I think we are. I think we're a few moments away from a break right now, For all those listening, we are available to take your phone call. You can call us at 800-808-5548. That's 800-808-5548. Give us a call. Ask us anything you'd like to ask us about real estate right now.
And our theme for the day is what you don't know can hurt you. And so we're going to come back with Shannon and Scott, and of course Joe and Chris. And we have a mystery
this other
guest
guy.
I said Joe and Chris. And of course we have a guest, mystery guest that we're going to introduce when we come back. So
stay tuned.
Welcome back to the Real Estate Rat Pack Radio Show with Chris, Joe, and Rob. The crew is taking your calls, so dial in at 1-800-808-5548.
And welcome back to the Real Estate Rat Pack Show. We are live in studio. We have some very special, beautiful guests in studio right now. We actually have the Brownie Girl Scouts from 16375. How are y'all ladies doing? Oh, look at that. That sounded great. You all are in here doing a little tour of the studio. How do you like it so far? Good. Man, that's a great question answer you guys are answering on us. One of the things that we like to do, and if you guys want to, is there somebody special you want to say hello to on the air? No? No one? No one? Well, we appreciate having you on board today. And guess what? Y'all are officially on air. You have a lot of people that are listening to y'all saying that y'all are good. Isn't that neat? You want to say hello to your daddy? Say hello to your daddy. They don't listen to... Okay. Okay, well, that's fine, though. We have a lot of other ones that do, though, so that's no problem. We appreciate y'all being on board today, and we hope y'all had a great time in coming on board and being on air live. Was that fun?
Yeah.
Yes? All righty. Well, y'all take it easy today, okay?
Thanks for coming by.
Okay, thank you very much.
That's awesome.
That was the Brownies. That is 16375. Thank you all very much for being on board today. It's always fun to have individuals in here so we can speak and give everybody the good experience of being on the radio, something that we get to enjoy every week and that other individuals like to hear. Yes.
Oh, no way. They did bring us some
Oh, my
cookies.
gosh,
Cookies.
that is
Oh, my
great.
gosh.
Sweet.
For everybody, thank you very much. We just got a thank you card, and we got some Thin Mints that we'll be sharing right now.
Love those.
Yes.
Those are my
no,
favorite.
but they gave them to me, though.
Yeah,
they gave them to me.
And he doesn't share
Yeah.
well. I know that.
Well, you know, our theme of the show this week is what you don't know can hurt you, and we're covering our subjects, real estate, mortgage, and credit. And during the last segment, one of the things that came up is realizing that each market creates its own set of hurdles. And you guys touched on this, and I know this really plays into your subject, Chris, but dealing with appraisal issues. Chris, how's that affecting your industry, and what the consumer doesn't know can hurt them?
Well, you know, one of the things people have to realize is that there's a couple things that happen, and you mentioned this earlier, Rob, and obviously we've talked about this, is you had the HVCC law that went into place. Then consequently, we have a new law that's in place right now, which basically what it did is it took the regulation of the appraisal companies. And whereas before we could call them up and say, hey, could you get this out to me fast, or what do you think you can get for it? Nowadays it prohibits the conversations between agents and mortgage companies with the appraisal companies. So what ends up happening right now is you're having a lot of appraisals going on with individuals who really don't know sometimes those areas. Now, the one thing that has changed and has not changed is most of the time what a lot of companies did to really differentiate themselves is to go out there and hire an appraisal management company, and that appraisal management company chooses what appraisers go out there and do the appraisals. And sometimes it's very similar to the VA system, whereas you might be doing a deal in Katy, and they're sending somebody from Pearland to do that appraisal right there. However, a lot of companies nowadays are trying to make sure, because the new law went in place, they are consolidating with some of their existing providers. The one thing that is happening from an appraisal perspective that we're never going to be able to get rid of, and it's sort of interesting, is that while I agree with Rob has always said that, you know, the true market value of a home is what a buyer and a seller are willing to pay for each other, right? But what a bank is saying is I want to finance what we consider the true market value is. And just because a buyer and a seller are willing to pay over value, if you have other areas, if you have other homes in the market that have not sold for that amount, the bank wants to make sure that you're financing the amount that is appropriate for that appraisal area. So, you know, the one thing that we're seeing a lot is, as we mentioned, and this is why it's important to work with y'all, is that the appraisals aren't coming in some areas as they were, especially some of the lower priced areas. You know, if you're looking at appraisals that are less than $200,000, you don't have enough margin in those. Whereas if you're working with a deal generally $300,000 or $400,000, guess what? You know, a 2% increase is fairly easy. 2% increase on a $200,000 home is a lot different right there. So what we end up seeing a lot of times is you have to make sure you do your due diligence up front. And then the other thing that I always suggest, and I work with a lot of my great agents that I work with, and it's no different with y'all, is guess what? Be prepared when that appraisal goes out there to have a list of comps that you think are going to best suit this property. Because remember, an appraiser, if they're not from that area, might not necessarily know. They might not know, you know, they're going to do everything based upon what they see and what they see on a system, but it might not necessarily be the best comps available. So they need a lot of that help a lot of times. You were going to say something?
I was. One of the things that I've noticed with appraisals lately, and you were talking about market value, what a ready, willing, and able buyer is going to pay for a house on any given day.
Right.
One of the things we're finding now, especially in multiple offer situations, is you've got 5 or 10 offers coming in at or above your list price, and appraisers are ignoring it.
Oh, absolutely.
Although there are 10 people that say, this is what we think this house is worth, this is market value, an appraisal value is a very different animal. And one of the things they miss when they're coming in from areas that they're not familiar with the houses. I had one appraisal go south recently where the appraiser used several foreclosures that had been in the area, and the pictures online on a foreclosure look great, but they don't show the damage that's inside the house.
Right.
And so the appraiser doesn't understand that house may have smelled like urine so bad that you couldn't stay in it for more than 10 minutes.
Right.
But the pictures make it look like it's in great shape. And so the comps that they're using may not always be something that they're aware of, and we as real estate agents try and make them aware of that. And I try and get every seller that I've got to write up a list of any improvements that they've done in the house to be there with the appraiser, to talk with them, to show them that their house has the value that we're trying to get.
One of the things I tell everybody as well, remember, unfortunately, there's not an exact science out there, and the appraisers, by law, by their rules of being able to do, they have to judge a home by certain factors and values that are put forth among them by Freddie Mac and Fannie Mae and FHA, or our government underwriting guidelines, and VA, right? So unfortunately, one of the big misnomers out there, and I speak to a lot of appraisers about this, is one of the big misnomers is that if you're buying a home, price per square foot means a lot to an appraiser. Unfortunately, it really doesn't. Price per square foot is an afterthought. Once they've done the appraisal, they have to put a price per square foot in there. But a lot of times, if you see that, guess what, we're doing an appraisal and the average price per square foot is $95, why are you appraising mine out for $86? It just happened to be that way because the price per square foot is not an appraisal mechanism to appraise a home. And so that's one of the things that we're always educating individuals on is we understand that, you think the comps are 95, but yours might end up being a little bit lower.
From a consumer perspective, again, I dealt with this issue myself when I first purchased the house. Well, actually, I was getting a refinance done on it. But from a consumer's perspective and on the or owner's perspective on the what you don't know can hurt you front, is it a common issue that you get an appraisal on your house and I have a professional that comes out and appraises my house, and so that's what my house is worth? I had a guy come out to my house, spent maybe 15 to 30 minutes there, and gave me an appraisal. And I got an appraisal that was about $30,000 below what I knew it should be at. I went and did homework after that, and I knew a bunch of realtors and everything else, had to pull comps and everything else, and by the time I was done, I'm like, this guy was an idiot.
Well, not all appraisers are created equal.
Yeah.
I had another guy come out. I paid for it, had the guy come out, and I ended up getting an appraisal that was much more in the range of what I expected. If you aren't savvy to that at all, I just happened to, at that time in my life, know realtors and be in the market. I wasn't by no means an expert, but I knew enough to know that something was fishy about the quality of that appraisal. Does that happen? Is that an issue that consumers deal with?
Let me make a comment here, and the fact is, we do not buy our cars by the pound. A Chevy and Mercedes weigh about the same, but we have somehow or another instilled in everybody that you go by price per square foot. And I think we've actually hurt ourselves, and of course that's exactly what appraisers do. You've got, this is the average of the price per square foot. Let's multiply the square footage times that, and that's what our value is. And there's other pieces in there. And of course, when you have people come from management companies or coming from areas out, I had one that came in from San Antonio to do an appraisal. So it is imperative that no longer can the lender have conversations with the appraisers, but realtors can.
Yeah, I think that's so true. I think it's very easy to get hung up on price per square foot, and you definitely want to look at that when you're running your comps as a realtor. But, to buyers, the average buyer, overall price is the big key there. It's not necessarily price per square foot. So I totally agree with that. It's easy to get hung up on that.
And you're absolutely right. One of the things that we see, because it's the easiest way to get confused. The other thing, to get back to what Joe was talking about from an appraisal perspective, is remember one thing: market value, what you're willing to pay for the home, and taxable values are all different. Oh, yeah. Those are not one and the same. And people sometimes get confused in regards to that. And you were going to say something in that regards.
Yeah, I was going to mention, you're exactly right. There are three values on any home. It's market value, appraised value, and assessed value. And they're all three different. And if you get three different people to do each of those values, you'll get 9 different values.
Right.
One of the things that Shannon was mentioning that keyed something in me is that, when you're doing market value and comparables for our clients, you have to pay attention, especially like a great area. I was just doing this yesterday with clients. When you're in an area like the Heights or Timber Forest or Garden Oaks, Oak Forest, something that's where the houses are much older, built in the 40s, and they've been remodeled several times over, dollar per square foot is where you start. But then you've got to work through what's been remodeled, how young is it when it was done, what did they put in on everything? Is there granite countertops? Have they redone the bathrooms? Did they redo the backyard with a deck? Did they redo all the flooring? All that plays into real value on a house.
Oh, yes. And the one thing I tell everybody, and I always say this jokingly, is remember, we have to use an appraisal company. Don't blame the mortgage company for it, though.
It's almost
Or the realtors.
Or the realtors for it
it's
either,
a good
by the way.
segue for our next segment, but and it would no way work from a cost perspective. But I wish they treated appraisals like they did credit scores, because they need to get 3 of them and go with the middle.
Yeah, and unfortunately, it'd be
That's a
really
great
expensive, but I would agree
Yeah.
with you right there. It's one of those things, I tell everybody is an appraisal is an important part of the buying process if you're obtaining financing. But just remember, you have to go with individuals who can correctly walk you through that process. That's why we talk about dealing with y'all in regards to a real estate agent, dealing with a professional like me in regards to a mortgage, dealing with Joe in regards to credit repair. You have to go with professionals who work together, understand the market, and can walk you through correctly the changes that might or might not happen right there, because it's important to understand how to deal with them when they do arise. And issues are going to arise. We see it every day. So it's one of those things.
What are the issues you see coming up in lending right now besides appraisal?
The number one thing, and I know we're coming up against a break right now, but rates are moving right now.
Yes, they are.
And I want to talk to a lot of people. Maybe we can do that in the fourth section about a little bit about how to address rates, because we're still at an all-time low, but people got used to being the differences. Or you offer me a 3.25 or a 3.375, and those days are gone. So that's definitely something we'll talk about the last segment right here.
At 18%. So
Yes, exactly. So we'll talk about that towards the end of the show. We'll go over a little bit about rates, how it's impacting, and why that change is taking place right now. But in the meantime, we're coming against a break right now, so all those, stay tuned. We'll be right back.
Welcome back to the Real Estate Rat Pack Radio Show with Chris, Joe, and Rob. The crew is taking your calls, so dial in at 1-800-808-5548.
And we're back. Glad to have you guys here with us today. We've got an awesome subject going on. What you don't know can hurt you, and when you're dealing with the biggest investment that you'll typically ever make in your life, this is a great subject to address. We're going to get into all the serious stuff here in a second, but we've got another little fun tidbit to share today. After a grueling, rigorous application process. It was nuts, wasn't it, Rob?
It was countless interviews. We were having resumes come in from all over the planet.
I had to turn
All
the
over the
fax machine
country.
off. It was just going all night long, keeping me up. It was just resumes coming
But
in.
we finally made a decision.
We narrowed it down. There was a grueling 8-step interview process and multiple appearances, that type of thing. But we finally selected somebody.
And would you introduce?
We officially have the first Real Estate Rat Pack Mousette.
The first mouse set.
We want to welcome to the studio Missy Welzine. Missy Welzine. Did I say that right?
Yeah.
I got it right?
Give her a
Yay.
microphone so she
So
can say
here you
hi.
go. So say hello
Hello, everybody.
and tell us who you're with.
I work for an independent insurance company called Freeway Insurance. We specialize in non-standard auto, preferred auto, homeowners, and commercial, so we have lots of markets that we can shop for you.
Very cool. I would say with a name like Freeway Insurance, if they didn't do auto, I was going to be really shocked. No, we don't mess with cars. Well, it's awesome to have you here today. And when we announce our events and that sort of thing, which we have some nice events planned coming up here.
We definitely do.
We'll have the official Mousette out with us.
We'll use the word term planned loosely.
Yes. Yes.
So we were talking about some of the issues and hurdles in getting into the lending process, and that was, of course, a great segue into what Joe does.
Absolutely.
And the things that you're seeing when they come in, we were talking about rates going up, and we'll talk about that a little bit later, but how often does somebody come in and they look like they're kind of qualified, but they pull their credit up and there's an issue?
Well, I speak with Joe, literally speaking, every day. And I don't want to say that conversation is always about the Real Estate Rat Pack Show. Joe and I...
As good as it is.
As good as it is. Let me tell you, Joe and I speak every day. And, one of the things I tell everybody is individuals have to know where their credit stands. But if you have a credit issue, and let me tell you, credit issues can vary. It can be low credit. It can be an issue that's ill-reported on your credit. I refer everything over to Joe. And this is something that I know Joe doesn't want to talk about as much as I do. But let me tell you, I have used long time ago a lot of different credit companies, and I could not get somebody to return my phone call. They didn't have the technology. They didn't have the staff. They didn't have the tools. This is an organization which has Improved My Credit USA, that the second I refer somebody over to them, they link me up with an online website. I get to see and manage that prospect and how they're working through. They assign them an individual to work through the process. And Joe is very engaged in the company and in the success of what's going on in credit repair. And Joe, that's probably a good leadway for you. Talk a little bit about Improve My Credit USA. And more importantly, what are the factors that are impacting credit today?
Well, the thing that I really wanted to touch on this subject, you touched on the communication and all that sort of thing. We're really extremely focused on the customer experience side of it. This may shock a lot of people to know. For the last 3 years, we've been the consumer voted #1 credit repair company in Texas. And I get asked the question occasionally, even by my competition, what's so special about you guys? What makes you #1? And I'm like, when it comes to what we do, it has nothing to do with credit repair. So you're saying you're not any better at credit repair than anybody else. When it comes to the big companies, the companies that actually are stable and not just a mom-and-pop shop working out of their garage or something, we all do the same thing. There's only so many ways you can write a letter, and no human eye is ever going to see that letter to begin with anyway. It's scanned into a computer. The computer looks for keywords and automatically pigeonholes you in one of 20 categories that defines your dispute. So it's either identity theft or it's this isn't mine or incorrect balances, but they've got 20 categories they stick you in, and off it goes. It's an automated process. Nobody reads that 20-page letter that you wrote about how your aunt had cancer and you just tried to support her financially and it caused a burden and you couldn't pay your bill. Nobody cares. No one ever even reads that. So when it comes to that part of the process, all of us, the bigger companies, do the same thing. So at that point, it's not about that aspect of it that makes us better or worse or anything else in the industry. What makes the difference is the customer experience side, the communication side, how well you keep them in the loop and all that sort of thing. But this kind of leads into what I really wanted to talk about. I actually wrote an article about this and shot it out to 17,000 of my closest friends via email here last week. That's
I thought I was the only one.
Yes, you would have gotten it. And it was called The Real Truth About Credit Repair, because the biggest flaw that I see in our industry is that they buy into what the consumer is driving. It's really driven by the consumer. The consumer engages or hires the average credit repair company under the premise of, I'm paying you to delete the bad stuff and make my scores go up. That's what the average consumer thinks they're engaging a credit repair company for. And consequently, because that's what the consumer wants, credit repair companies speak to that. They talk about that. They say, well, this is all the stuff we've deleted, and we can delete this, and we can delete that, and all that kind of junk. And first of all, it's illegal. You can't say that stuff. Right? You can't make a promise of an outcome in the credit repair industry. I can't tell you how soon your scores are going to be where you want them to be. I can't talk about it's only going to take 3 months or 6 months. Or any of that stuff is illegal. And if you're dealing with a company that talks about that stuff, at best, they're uninformed. Right? So I wrote this article saying what you're really hiring a credit repair company for. And this goes for everybody, my realtors, my builders, for mortgage people, the end users, everybody. The goal for me as my company is to correct that attitude in the industry, is that what a legitimate credit repair company should be hired for is to make sure that everything that's being said about your client or about you personally is 100% accurate and 100% verifiable. That's the real deal. Because unfortunately, our credit reporting system is screwed up like crazy, right? Sorry if you're working for a TransUnion, Equifax,
Can
or
you say screwed up on the air?
Yes, you can, and especially when you're referencing the bureaus.
Okay.
Yes, there's a massive issue. 60 Minutes, I'm so glad that, because it used to be nothing but negativity towards my industry, and finally the view is shifting. Because there is a big problem with our credit reporting system. There's so many errors made. My average error ratio for a customer that comes to me, now I'm only working on people that have negative issues, that type of thing, runs about 70%. 7 out of 10 items end up being found to be inaccurately reported, unverifiable, duplicates, all that type of thing. And so 70% typically ends up being removed because they just didn't follow the rules in how it was reported.
And one thing, Joe, I'm going to tell you this, and this is important for everybody to know, is it's important what you just got through saying as far as the client service, the customer service, the experience, and the know-how right there. Because let me tell you, I can't tell you how many clients that we get in and say, oh, I was working with a credit repair company. They put a dispute on all my accounts, so now they're removed out of my credit score. And my first comment to them is, guess what? You want to get financing? We have to remove all those disputes now. Because Freddie Mac and Fannie Mae and our government, as far as the underwriting systems, have now said, guess what? You cannot have a disputed account on your credit report because, technically speaking, all you're doing is circumventing your credit score by removing it out of the criteria for credit scoring. So, that's one of the things that Joe was talking about is when we work with Improve My Credit USA, that's part of what we like about it. We can't guarantee a time frame. We can't guarantee anything. The only thing we can do is go through and try to find those errors and opportunities to get it rescored and corrected correctly. The incorrect way, and Joe, tell me if I'm wrong, is to go out there and just put a dispute on everything because it's going to end up coming off if you're trying to get financing.
Well, and again, that goes back to creating a false perception about what credit repair is. Unfortunately, the way that the credit repair process works is that the credit bureaus only give you the opportunity to dispute something. A dispute, in reality, translates into a request for verification of accuracy. That's really more correct statement, but they don't word it that way. You just have dispute. That's it. It's disputed. I may not really be disputing it. I'm just asking you to verify that the information's correct. I don't know. I get all the time, you see things on credit reports, and the consumer's like, I have no idea what that is. Because it'll be some random statement item for $39 after hours and hours of investigation. You're like, well, it was a medical claim that didn't get paid by the insurance company. And now you get a $39 collection, and it tanks your credit score 100 points.
Yeah. With a dispute and a ding on your credit, are they equal?
Well, no. And here's what happens, though. You have a negative item on your credit, and the only way you can deal with it from a credit bureau standpoint is to say, is this accurate? You write a dispute letter, and they now, by law, have to investigate and verify the accuracy of that item that's reporting on your credit. And to do that, they have to put it into dispute. And so what happens from the lender's side is that some items, not all, when they're in dispute, are removed from the credit scoring model. So it impacts or affects your credit score. So it creates a false credit score, which is why now the underwriters are saying you can't have anything in dispute because it creates a false score and you have a false positive on your credit.
And that's what you just got through saying is absolutely true, and that's why one of the things we work with very closely is go through the process. Go through, when we work with Improve My Credit USA, they go through the process and we manage that process to make sure that the disputes are put on, that the verification is done, and then the dispute is removed.
Correct.
So we can come back and get the correct information we need to get that file approved. Because if we don't do it that way, the opposite way is, they've already disputed everything and I've got disputes on my account, it still doesn't work.
Whether you're engaging my company or any other credit repair company, and this goes for every realtor, mortgage person, builder, listener, consumer, everybody, the message I really wanted to convey with this what you don't know can hurt you thing is know why you're hiring that company. It's not to delete all the bad stuff and make your scores go up. I know that's what everybody wants. That's the Fantasyland picture. Everybody wants the unicorn with pixie dust and sprinkles and everything's wonderful and rosy.
That's not in your backyard?
Yes. What you really want to hire them for is to say, I want you to check out everything that's on my credit profile to make sure it's 100% accurate. That way, when the customer goes through the experience, if you've been referred to us and everything stays, you're not upset. Because what you got was everything was verified, checked out, accurate.
I want to ask you this question while we're on this. With consumers, when they come to you, do you help them? Do you lay out a plan how they can improve their scores as well?
Absolutely.
Oh, that's a softball question.
That's a good one for the last segment where we can all kind of chime in because there's a lot to that. And from a lender's perspective, too, there's a lot of things other than a credit score. So when we come back from break, let's kind of touch into that.
Never a trace of red. Now on the sidewalk, ooh, sunny.
Welcome back to the Real Estate Rat Pack Radio Show with Chris, Joe, and Rob. The crew is taking your calls, so dial in at 1-800-808-5548.
And and we're live, and
we're live, and both of us are talking.
I had a screen between us here. I couldn't see you. So.
I know. I was looking at the 800 number for everybody to call in and ask a question if they want to at 800-808-5548.
We've got a great subject going today, and it's one of those topics that I don't think we talk about enough, where it's the hidden things in what we do as professionals that you guys make what you do look easy to the consumer and all that sort of thing, and they don't really know and can't always appreciate the stuff that happens behind the scenes that makes the home buying process run smoothly. So when we were leaving the last segment, got a great question on what does it take from a plan perspective. Because this really, credit is only a small piece of the pie. And so even from our side, when I'm working with a customer, when we go over the essentials of improving your credit profile, Whether they become a customer of ours or not, every one of our client gets a pretty thorough analysis of where they're at and what they need to do to improve their credit. And a lot of times that doesn't involve us. I've had plenty of examples where, yeah, you've got a couple things we could work on, but really your main issues are X, Y, and Z. Maybe the balances on your credit cards are too high, and that's what's bringing your credit scores down significantly. So if you focused on taking care of that, it would really, address your biggest issue and get you where you need to be able to qualify for that loan. So there's plenty of that kind of stuff going on. From the credit score side, to give you an example, something that a lot of people don't know is that only 35% of your credit score comes from your payment history. Only 35%. It's the number one category. It's the biggest aspect of what affects your credit score. But check this out. This is a shocker that most people don't realize. Only 5% less. A full 30% of your credit score comes from the balances on your credit card. That's huge.
Absolutely.
Huge. So I could take care of negative stuff that's happening on someone's credit, but if their credit card balances are out of line or out of whack, the debt-to-income ratio is looking crazy for Chris over there, they're just as in bad shape. So that's one of those things that we have to counsel that person and giving them a plan. Hey, look, we're going to go to work on verifying these negative things that are on your credit, but during the next 4 to 6 months, which is the average time frame somebody's with us, you really need to be focused on bringing the balances down across all your credit cards to at least 30% or lower. That's a good example.
And I'd like to ask this
Right.
question of Chris and Shannon and Scott is, what percentage of people are having credit issues when they come to you?
That's a very good question. I would venture to say right now that we're still probably, it is definitely dependent upon what market you're in. Your higher-priced homes, your million-dollar homes generally don't have that. Your lower-priced homes have a greater percentage of it. But overall, probably about 35 to 40% of everybody.
That's a big number.
That is correct. And it's only growing because what's happening is, unfortunately, underwriting guidelines are still becoming tougher. They're still trying to make sure we weed out individuals who the government or Freddie Mac or Fannie Mae don't want to have as a client. And so what's the best way to do that right now? It's still through credit. And so if you see all the changes they're always doing, they're always adjusting not only credit score, but then they can't have a collection past this amount or above this amount or below this amount. So we're seeing that's going to continue. We're going to see that going forward. That's probably an area that we're all looking for to lighten up a little bit. But also, it's proven fact right now that lending is at an all-time high from a strength perspective. The portfolios are performing very well. And so I don't think it's going to enable anybody to really go down anymore and say, oh, let's make some softening up here, because no one wants to go back to 2007 and 2008 and have that bubble burst again and then also having these mortgage-backed securities be in trouble.
Yeah, Shannon, Scott, what are you seeing out there when you're dealing?
I think we have a call on the line.
We absolutely do. We have a caller in line right now. His name is Dennis. Dennis, how you doing?
I'm doing well. How are you doing?
Very well, thank you.
Awesome. My question was this: with the Fed increasing interest rates, do you see that the real estate market may be slowing up because everyone's jumping on the financing right now? So now that the interest rates are going up, you see that affecting the market?
Well, that's a very good question. One of the things, and I think we're both going to answer it on both sides. I'm going to answer it, and then I'm obviously going to have one of our guests here answer it. But from a mortgage standpoint, let me tell you, I've been in the market now for 12 years. When I got into the industry, we were financing loans at 8 and 9 and 10%, and it was extremely strong. 5 years ago, when rates were still in the 5s and 6s, we were still financing a lot of people, and it was very strong back when the no-doc and everything was around. I don't really see right now what's going to happen like anything. There's going to be a shock that people are going to sit there and go, oh, my gosh, rates are going up, maybe I need to wait. But the majority of individuals are going to be out there saying, you know what, a home is a home. It's still something that somebody wants to buy. And let me tell you, the fact that a rate is in the 4 today, when you've got countries still financing in the teens, is still extremely aggressive. And I don't see any which way it's going to impact the strength of the Houston market per se. And in fact, Bernanke came out and basically said the reason why that they have stopped doing the mortgage-backed security artificial inflation of interest rates is because the housing market is now standing on its own 2 feet on a national level. And I think we're going to continue to see that. It's only going to get stronger. And here's one thing most people don't know about. Raising interest rates over a long term is going to create a private industry in the mortgage industry. That's only going to help foster additional ability to get people into homes. What do y'all think about that?
Well, I totally agree, of course. And, it all depends on what your market is. And here we are just continuing to be so strong. It depends on the neighborhood, depends on the city, all that. But, I think we've got a strong market here. We've got this Houston area with oil and gas and medical. And I think it's just going to stay positive for a good while.
I would agree. And the other thing also is, remember this. The difference between a 3.25% interest rate, and I'm using an extreme right now difference, but a 5.25% interest rate is probably $120, okay, on an average $200,000 home. That's a 2-point difference. So let me tell you, and I've said this before, is if $120 is going to make or break your buying a home, you are probably not a good candidate for that home to begin with, because a lot of other variances are going to be happening. So, one of the things, Dennis, yes, rates are going to continue to go up, but I don't think it's going to stem the growth in the real estate market, because we have less than 3 months of inventory on the ground. In certain areas like Katy, where we're from, less than a month of inventory on the ground. We have builders that are selling out of communities literally within months versus years. So, the one thing that we do see, rates will continue to move up, and individuals just have to plan accordingly. I think that's the biggest difference we're going to see right now.
Well,
I agree.
Do you have any comments from your clients and stuff like now when they're out shopping to be looking at interest rates?
Yeah, we've got a lot of them that, in fact, over the last 3 weeks, I think I've had every single client call me going, should we lock, should we lock, should we lock? And it's one of those where, yes, rates are going up, and I think what you're going to see, Dennis, is back about a year and a half ago in January when the rates first kind of started bouncing up off of that 2.8, 3.0 range, a whole bunch of people responded, jumping off the fence, going, oh, my God, they're going back up into the sixes. And then they came back down, and then they went back up, and they came back down. And I think buyers have gotten kind of used to the roller coaster ride and are not as eager to jump immediately with a small rise. Now, once we start hitting the 4.5s and 5s, I think you'll see a bigger response from the buyers than you have recently. But I don't think you're going to see a massive change until we get to that higher end.
And, and let me answer one question you said right here. And, Dennis, this is for you and for the listeners, is the best time to lock is when you are most comfortable with the rate, okay? A lot of people want to try to play the market. They want to try to play it. Let me see. There's no sense in playing the market today because the difference between an eighth of a point or a quarter of a point doesn't mean a lot, and yet you risk more on the upside than you do going down. So those are some things that you have to take care of. Hopefully those answer some of your questions, Dennis.
Definitely.
Well, we really appreciate you listening, and thank you very much for calling in today.
Thank you.
Thank you, sir.
Be sure to catch us if you're on Facebook. Check out the Facebook page at facebook.com/Real Estate Rat Pack.
And we are coming up almost against the show already, so we're going to do our lightning round. Our lightning round on this show today is we want everybody to let us know one thing you want our listeners to leave with on understanding what you don't know can hurt you. Joe, we'll start off on that side if you don't mind.
Yeah, absolutely. What I need every listener to know and every real estate and professional out there to know is that engage a credit professional for the right reason to make sure that everything that's on your credit profile is 100% accurate, 100% verifiable, because it's very frequently not.
Absolutely. How about you, Rob?
Well, it's got the same simple messages. Hire people like Shannon and Scott. It's people who are veterans. And if they're not a veteran, make sure they have access to a veteran that can get you through a lot of the pitfalls and quicksand that you can find in these transactions out there.
Shannon, how about you?
Yeah, same thing. Just hire a realtor, hire a lender who you've heard about, that you've gotten a referral from. Talk to your friends, talk to your family about who that best person to use is. And once you go with them, hopefully, they're going to have an experienced realtor or lender. They're going to have all those other people at their fingertips who are going to do a good job, inspectors that you can work with, different vendors that they've done work with before, and that can lead them in the right directions.
Shannon, how can people reach you?
They can reach me through Facebook, through my website, shannonsellskaty.com.
How about a phone number?
And a phone number, 713-295-1030.
How about you, Scott?
Okay, I'm going to try and bring this full circle and talk about what you don't know can hurt you. And in today's market, the reason you need to hire a professional like Shannon and myself, or you or Joe or Rob, is that, well, let's just take listings right now, selling so quickly and with multiple offers. that some people may want to jump out there immediately and put theirs on the market and sell it before it even goes on the MLS. Well, if you don't put it on the MLS and you don't have a real estate professional to do that for you, you may miss out on several $1,000s from several offers coming in. So it's one of those things where we make what we do look very easy, and although it's easy, it's very complicated.
I definitely understand. Scott, how can we reach you real fast?
You can reach me at 281-433-7621 or Facebook, Twitter, my website, southgateyrealestate.com.
You know, to all listenings, we're going to have to go off air. We'll see you next week.
And you've been listening to the Real Estate Rat Pack. The question is, who's Frank, who's Sammy, who's Dean, and who's the other guy?
Chris is Frank,
I'm
he's
Dean.
Dean, and I'm Sammy.
Yes, that's right. Yeah.
So tune in to the really big show every Saturday at 9 a.m. right here on 100.7 The Word, KKHT.